Hi traders, this is Forex Nelson and I'm back again today with another training video for my Super Sniper trading system. Today's date is April the 12th and this video will be called How to Trade the London Session. Probably can tell by now that each and all three sessions, the charts and the trade setups and everything is exactly the same. And the more that I show you repeating over and over, you'll have a good chance that you'll start to find success. Once you find success, you'll find that you're just doing the same thing every day, over and over, collecting a whole bunch of pips. But it does take some time to learn how to trade. Now the London session is this colored blue box here. This is Asian, London, New York. Now I started the box an hour before the open. The open is actually at 3 a.m. New York time right here. It's open for 8 hours from 3 to 11, so it's open from here. And the London close is right here. So the move from there to there, that is the London, London session. So once you establish the fact that the trend is down, quite clear, moving averages are in order, and the bars here are below the waterline, goal line's going down, that qualifies for a great way to trade. Now in real time, if you drop it down right here on these red candles down to the 5 minutes, price action would be right around here. And on the same 5 minutes, price action here will be about here. So you have your choice, either pulling the trigger here or wait for the pullback. And as soon as it's in this general area, you can take the trade. That's 33 pips, but if you're taking a trade, it didn't even go 1 pip against you. And of course, you can stay in the trade until you're either happy, and that's 129 pips, I would be happy with that. But if you want to hang around for more, by the time the London close, or thereabouts, forgot where it was actually, but like that's 165 pips. And I'm pretty sure you'll be very happy with that London trade. Now before you start your trading, don't forget to put your daily trade plan together. And for sure, you'll have the 4 hours in the daily in your favor for shorting. Put an arrow somewhere over here, down arrow, and then you just wait for the pullback to get into the trade. Very easy to trade using the Super Sniper. Okay, let's move on to the Euro CAD. The Euro market is open. Now, let's see. This is not a good example as it's very flat here, but as you can see, this will be great for New York. Look at that move. Let's see if I can find a better trade setup. Now remember, as you're going through all these instruments, 21 of them, or whatever you're trading, very important that you find a nice smooth setup, nice looking charts like this. 3 moving averages across. Now the goal line's going down and we're below the waterline on the AO, qualifies for a great way to trade. Now in real time, if you drop it down to the 5 minutes, these candles and these candles will be around the red moving average, and that means it's good to trade. So if you take the trade there, stop will be, well, it's about 14 pips, and the most you could have made on this huge, well, that's 74, and that's like around 80. And remember, every time it comes back up, here, here, and here, you can always get in. Once you get to this point, you're just scalping. That's just the way trading goes. Try to trade within the first 1 to 3 hours when the market is open. So moving on to the Euro Yen. Here's the beginning of the London. And the 3 moving averages are looking great. and we're above the waterline on the AO, and the TZ magic indicators coming from the bottom. So this would be a good entry here. And of course, if you drop it down to the 5 minutes, you might get some points of entry around here. So if you manage to catch it here, stop will be about 18 pips, and the most you could have made was 120, approximately. And remember, every time it comes back to the T area, these are all buy points until it officially breaks the gold and the direction of the trend changes. Euro New Zealand, here we go. Remember, you want the charts to look exactly like this, all in proper order. You know, the 20, 30, and 50. And the goal line's going down. Qualifies for a great way to trade. So you're just waiting for the pullback. That's the magic word, here and here. For trading London, so let's say you get in here. Stop will be about 12 pips. And the most you could have got for this London session is about 90 pips. So risking 12 or 13 to get 90, that's a pretty good return. Remember, every time it comes back up into the T area, T stands for trade, entry area, take the trade, 10 pip stop. Again, you're looking at around 85 pips. Again, excellent return for your trading opportunity. Okay, moving on to the euro dollar. Here we go. Moving averages are in order. Price action is above the goal line. Goal line's going up, and we're above the waterline on the AO. Qualifies for a great way to trade. So every time, every time it comes back to the goal line, you can pull the trigger. Make sure you're going in the direction of your daily trade plan. If you take the trade there, you can get away with a 10 pip stop. To there is 79, and of course it maxed out at 170 or 180 pips. Okay, moving along to the pound pairs now. Pound, Aussie. So certainly looks like the market's moving down. Don't forget to check your higher time frames. Your plan says to sell. Put it down arrow here. Now remember, don't sell here. That's not a good plan. You're going to be down 45 pips. You must wait for it to come back into the T area. Or better still, as close to the goal line as possible. Now if you take the trade there, you can get away with a 10 pip stop. And it did bottom out for a maximum around 64 pips. And of course, every time it comes back up, sell. Back up, sell. Up, sell. Up, sell. Okay, let's move on to the pound CAD. Nothing changes. This is exactly what the chart should look like. If it's messy and braided, just go look for another trade. If your daily trade plan says, and it will say at least 4 hours in daily, maybe even higher, to sell, well, put an arrow in here, down arrow. You must wait for the pullback, that's the magic word. So all of these candles are entry points. Let's say you get in here. That's your stop. Let's go with 10 pips. And the most you could get there was 70 pips. Keep in mind, it's not going to drop 100, 200 pips every day. But if I can grab 40 to 50 or 60 pips on one trade, I'm generally very happy with that. Moving right along to the pound Swiss. I put this line in here along with this little cursor you can see is called fixed chart position. It's usually in this corner when you take uncheck this box right here. Then you'll see this little cursor in the corner. You're just going to bring it over here. Now, anytime that you're definitely thinking about selling, but it's not coming back to the moving averages. If you drop it down to the 5 minutes, all of these candles here will be around definitely closer to the goal line, probably hitting the red one here, the 30. Remember, this is 30, 20, 30, and 50 EMA. Let's drop it down to the 5 minutes, and that's what that little cursor does. It keeps it, it's fixed. That's why they call it fixed chart position. As you can see, it hit there, right here. These are entry points. These are entry points. These are entry points. You can get in this trade 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 times you can get into this trade. And let's see where it bottomed out over there somewhere. So let's assume we got in right about here. Stop is about 7 pips. And once it levels out around 100 pips, you know, I would be very happy with that. But normally, if I can get around 60, I'm also good with that. Remember, every time it comes back up, more entry points, more positions. So remember that little tiny cursor. It's called fixed chart position. And you can drop it to different time frames and it'll keep it locked in. Handy little tool. Okay, moving on to the pound yen. This is a pair that moves a lot every day. Look at this, 305 pips. By the way, that's what these numbers stand for. 305, 292 from the top to the bottom. So once we establish the fact that we're in an uptrend, put an up arrow, goal line's going up, everything qualifies for a great way to trade. Remember, just wait for the biggest pullback into the T area or the goal line. Let's say you pull the trigger here. That is your stop. Well, 20 pips definitely will hold. Then you're going to stay in the trade until you're happy. And I'm sure you're going to be happy with 294 pips. But wherever you want to close, just close the trade. Now, it doesn't mean you're always going to get 200-300 pips. But, you know, 30 to 50, 60, 70, that is also fantastic trading. Love trading this pound yen. Every day you're going to find trades. Look at this. The moving average is crossed right here. And make sure you check the higher time frames. Let's say it says sell. Put a down arrow. You must wait for the pullback. And then once this red candle kicks in, we're starting to line up for a sell trade. Keep in mind that this AO is very powerful. If you're below the waterline, we're thinking about selling after a pullback. So let's say you pull the trigger here or here. Well, stop, you know, around 20 pips definitely will hold. And this London move, that's as far as it did go. And that's almost 100 pips. And that's why you got to have trade management and money management in order, because you don't want to be up 100 pips and then all of a sudden, before you know it, you're down 35. So remember, trade management, very important. Okay, let's move on to the pound New Zealand. Remember what I said, this is what you want to see. Moving average is looking good, qualifies for a great way to trade. Goal line's going down. Remember, don't ever sell here or else you're going to be down 65 pips. Now, if the trade plan says to sell 4 hours daily, for example, put a down arrow. You must wait for the pullback. That's the magic word. Now, in real time, you may pull the trigger here and it goes 22 pips against you. But as long as you know it's going to go down, well, don't freak out. When it hooks around, starts to go down right on the goal line, take the trade, and down to there is 40, and it did max out with about 130. And remember, every time it comes back up, sell, back up, sell, back up, sell. You can add multiple positions 2 or 3 times, and you can turn one trade into like 5 trades if you so desire. Okay, pound dollar. Another one that moves a fair amount. All the moving averages are in order. Qualifies for a great way to trade. Very clear. Now you must, providing that your trade plan says to buy, put in an up arrow. Here's your pullback to the goal line. It's a no-brainer. Get in with about a 10 pip stop. And it did max out with about 70 pips or so. And remember, every time it comes back, another position, again, and again. You can keep putting in trades as it's moving up or down, of course, depending on the direction. Moving on to, let's see, I might have a little bit of extra time and I'll probably look for another example on this pound dollar. Don't have to look too far, very clear. Moving averages are in order. We're below the waterline on the AO, qualifies for a great way to trade. Remember, wait for the pullback, that's the magic word. So all of these candles here, pull the trigger, including over here. So let's say you got in here, 10 pips will hold as a stop. And it did max out all the way to the London close with 90 pips, and after that, the party's over. Let's check out this dollar CAD. Here we go. The London is right in here. Everything. When the charts look like this, there's 95% chance it's going to go down, but just make sure you're going in the direction of the higher time frames, because it could stop right here and go up 100 pips. So, but if everything is saying to sell, put an arrow in, down arrow, wait for the pullback, take the trade. That's your stop, 11 pips. And the most you could have made there was about 60 pips. Not too bad for the dollar CAD, considering that the ADR, the average daily range, top left corner here, is only 71 pips. Actually, today it did 81 pips. Okay, now we can get into the futures. They move the most and pay the most. Keep in mind that crude oil pays $10 a pip, and once you see the moving averages cross and your daily trade plan is telling you to buy, make sure you put an arrow in here. And then of course all you're waiting for is the pullback. Now when the pullback doesn't quite hit the moving averages, remember that little cursor I was telling you about? Just bring it over here. There's your vertical line. Drop it down to the 5 minutes, and you're going to see it hitting the moving averages. There it is right here. Here, 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 here. Just get in the trade on the pullback. Stop is only 5 pips. Not too bad. And, well, to here is let's see now. Get this right. 200. All the way up to there is 488. Now if you manage to close the trade around 480 times $10, that would end up paying $4,800. A lot of money on the crude oil here. Let's go back to the 15 minutes. And we can just keep moving right along. Let's see if I can find another example on this crude oil. Didn't have to look too far. As you can clearly see, moving averages are in order. We're below the waterline on the AO. Qualifies for a great way to trade. Here's your pullback here, here, and here. You're going to pull the trigger with a 53 pips. And down to the bottom down here is 61 points. If you happen, or 616, if you got all of that, that would pay, need a calculator, 616. That happens to be slightly over $6,000. Love trading oil. It pays quite a lot. Now the DAX 30, this is a good one for trading. Once you see that everything is in proper order, there's that, let's see, there's a little cursor there. So let's put that little cursor right here on the line. Now when you notice that it's not coming close enough, just drop it down to the 5 minutes. And there it is right there. Entry point, good enough, good enough. So we're buying whatever your stop's going to be. Remember, you have to use all the digits. Don't be scared about like 150 or more, 200, 300. Don't worry about it. Because look at this. It's over, that's 4,300 ticks. The magic number, if you want to double your account, is as it's going up. Just keep a close eye on it. And when you get 1, 3, 3, 4 actually, hard to get it right on. One more tick, 1, 3, 3, 4. At that point, you're going to double your account. And it did, well, let me go back to the 15 minutes here. So let's see what that, let's say we got in about here. You're going to double your account, well, pretty fast actually, right there. 1, 3, 3, 4. Can you imagine if you close the trade up there? Let's just round it out to 7,500. 7,500. I'm going to use a calculator. You times that by $3.75. Now if you manage to do one standard lot with a $5,000 account, that move from there to there is going to pay you $28,000 and change. Fantastic. You can make and get your account to grow super fast. Love trading the DAX 30. Along with NASDAQ, you can double your account. Along with Russell, you can double your account. Moving right along, Dow Jones. Here we go, another one. Goal line's going up. Everything qualifies for a great way to trade. Here's your pullback here, here, and here. If you pull the trigger there, that's your stop around 20. And up to the top up there is 190. And of course, if that was 200, just so I can do the math better, 20 times 5, that would be a $1,000 move. Okay, moving on to gold. Now gold pays $10 a pip. This is exactly what you want to see. When you see this, and the daily trade plan, higher time frames, is saying to sell, put a down arrow. All you're waiting for is the pullback here, 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 here. And of course, you're going to get into trade. Let's say you do it here. Stop is, let's see, 67. Keep in mind that 10 or 20 pips is not enough. Because sometimes, what about if it came back here? That's 33 pips. And then, of course, once the market starts to move, pull back, move, pull back. London session paid out $270. If you take $270 times $10, that would be $2,700 for one standard lot. Okay, moving on to the NASDAQ. The NASDAQ does pay $20 a pip or tick. First thing I want to see is that we're in an up move and the charts are looking pretty good. Everything still qualifies for a great way to trade. This is what you're waiting for, the pullback. When you wait for the pullback and get in at the goal line, the stop will be the smallest. You remove the last 2 digits, so that is 20 pips. And up to here alone is like, let's see, NASDAQ, that's 320. Now the magic number for the NASDAQ will be 250 if you have a desire to double your account. So as soon as it hits 250, you're going to double your account. And let's see where that 250 is. Right about there. So at this point, if you did one standard lot with a $5,000 account, that's the way I trade, your $5,000 account will turn into $10,000. Now if you want some more information on how to double your account in one trade, just get in contact with me and I'll answer your questions. Okay, Russell, another one that you can double your account, but due to the fact that it pays $10 a pip, well, that magic number, you need 500 to get that. Okay, goal line is going up. This is the London session. Moving averages are in order. Everything qualifies for a great way to trade. All you're waiting for is the pullback as close to the goal line as possible. Let's say you pull the trigger here with a 22 pip stop, and it did top out with about 146. After that it just wouldn't go anymore. But if you got 140 times $10, that would work out to being $1,400 if you did one standard lot. So let's move on to the S&P 500. Another one right here. 3 moving averages cross. Here's your pullback. That's the magic word. Now if your trading plan says to buy, make sure you put an up arrow here. And you're going to pull the trigger right on the goal line. Stop will be about 68. Remember, 10 or 20 pips usually does not hold. And of course, the most you could have made on this was to the top of this box, which happens to be 842. So if you do, let's just say it was 800. 8 times 5 is 40. By the way, if you want to double your account on the S&P 500, that number, it has to be 1,000. But 842, and that would pay 8 times 5, 40. This would be like over $4,000 if you did one standard lot. Remember, manage your trade, because if you walk away from the computer, you're going to give all your money back to the broker. So let's move on to silver. Silver pays $50 a pip. Now you're not going to see hundreds and hundreds in the blue boxes. Look at this, 57, 58, 26. So once you establish the fact that the moving averages are in order and the goal line's going down, everything qualifies down at the bottom here like this. We're below the waterline, qualifies for a great way to trade. All you're waiting for is the pullback here, 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 and here. And this is also good to go. Let's say you pull the trigger about there. It's a 6 pip stop. Down to here is 50. And if you stop there, 50 times 50, that would be $2,500. And of course, when it does the pullback, you can enter again. And this full move here is roughly 70. 70 times 50, that would be $3,500 on a standard lot. Moving on to the last instrument, the 30-year bonds. Nothing changes when you see this. It's a perfect setup. You must wait for the pullback. And if you have the higher time frames telling you to sell, put a down arrow right here. So when it comes back into the T area or as close to the goal line as possible, take the trade. Let's say about 11 pip stop. Down to here is about 100. And down to there is about 136. And if you manage to get out with about 130, you would take the 130 times $5. That would be $650 for that move. Every time it comes back into the T area, sell, 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 and just keep collecting more and more pips. Trading this way is like having an ATM machine right beside you, and it keeps spitting out hundreds of $100 bills. Trading is super easy, a lot of fun, especially with my Super Sniper trading system. A wee bit of time left, so let's do one more on this 30-year bonds. Goal line's going down. Moving averages are all in proper order. We're below the waterline on the AO. Qualifies for a great way to trade. Well, that's what we're waiting for now. Pull back here, 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 here. Anyhow, I wouldn't be trading this late in the day, to be honest with you. Let's say we pull the trigger there. Stop is only 16. And of course down to here is 61. And down to there is let's go with 120. So if you take 120 times 5, so that'll be 6. So it looks like that'll move there will be roughly $600 as it pays $5 a pip. And out of all these futures, this one actually pays the least amount and moves the least number of pips. As you can see, you're not seeing hundreds of ticks here. So we're over 30 minutes. It's time to wrap up this video. Of course, if you have any questions, just get in contact with me. And if not, good luck with your trading, and we'll see you in the next video.